Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and yesterday was the lowest volume session of the year, and it was also the narrowest range that we've seen in the last 49 days. Typically, volatility contraction leads to volatility expansion, and if we look over the last couple of weeks, we can see that the market has been stuck in a range, and usually that's followed by a break outside of that range. So heading into the open, the overall context hasn't really changed much from yesterday. The market is still in a very balanced state. Our short-term bias continues to be neutral, and we have to continue to be nimble and flexible with our intraday bias, with the understanding that we could get a short-term directional move, and it's only a matter of time. Now, in order to get a directional move to the upside and a breakout above 76 quarter, 78 quarter, and 79.5 to 80.5, which marks the all-time high, we would have to see broad market strength in real time, and that means we have to see an advanced decline line that is trending higher and is in positive territory, and more importantly, we also have to see sustained upside momentum via the NYC tick holding above zero and printing some decent values. Now, given that the previous close is 77.5 and the advanced decline line is based on the previous day's close, if we are going to head higher, the AD line does not necessarily have to be very positive. It just has to be in positive territory and trending to the upside. In the event that we are seeing a lack of strength or outright weakness, then it would make it very difficult for the buyers to break ES beyond 76 quarter, 78 quarter, and 79.5 to 80.5, and in that case, sell side can step in and we can continue to balance within the recent range. On the downside, a break below 73 would be the first sign that sellers are really stepping in, and a break of 73 can lead to a test of the 69.5 high volume node and the 66 to 68 initial support zone. Responsive buyers can be active on first test of 66 to 68, but if we're seeing excess bearishness, excess weakness, and a lot of sustained downside momentum, then the market does not necessarily have to stop at 66 to 68, and we could even head lower into last week's low of 63 quarter and 60.5 to 62.5, where again responsive buyers can be active, and in order to put in any kind of sustained breakdown below 60.5 to 62.5, we would have to see extreme weakness in real time, so a very bearish advanced decline line and the NYC tick holding completely below zero and printing some decent downside values. So again, heading into the open, our short-term bias is neutral. The market is stuck in a range. It is in a very balanced state, but eventually we know that we are going to see short-term directional movement, and we know what to look for in real time in order to identify a directional type market. So if we're not seeing any excess strength or excess weakness, the market can continue to balance within a range, but we are trading near the all-time highs up here, so this is decent resistance, and in order for the market to put in any kind of sustained breakout, we do have to see some pretty decent upside momentum. A lack of momentum can result in a failed breakout attempt and continued balancing within a range, and then if we start seeing downside momentum, then we can quite easily head down into the 69.5 high volume node and 66 to 68, where buyers can defend on first test, and then if we continue to see a lot of weakness in real time, then perhaps we go down into 63 quarter and 60.5 to 62.5. So those are the main ideas heading into the open. Let's see if we start to see some signs of directionality today, and we'll take it from there.